Hello everyone. So we are going to begin the capital gain part 2, which is from the subject income tax, and this particular topic of capital gain is important for your UGC NET December 2018 attempt for paper 2 commerce. Now before starting with the video, I hope that you must have gone through our part 1 of capital gain. In case you have not seen it, please do go and have a look at the video which is being posted on our channel both at DU High as well as Anuj Jindal. Also, this particular topic of capital gain is very important, and so we are going to start some really important practice question based on capital gains. So now without wasting much time, let us move ahead and have a look at the first question for the day. Long-term capital loss can be set off from which of the following? So again the question is based on the topic of set off. So we had discussed in our previous video that long-term capital gain is the time period where if we classify those particular assets into three categories, that is movable assets, immovable assets as well as securities, then there are different time durations that tells us whether the capital gain is of short-term nature or is it of long-term nature. So just I would like to recall you once again that if the time period in case of movable assets is more than 36 months, then it's a long-term capital assets or you can say long-term capital gain, else it's a short-term capital gain. When in case of immovable properties, the time duration held before selling the immovable property is more than 24 months, then it is known as long-term capital gain, else it will be known as short-term capital gain. In case of securities, or you can say sale of securities of equity as well as other securities, when the time period is more than 12 months, it will be known as long-term capital gain, and in other cases having selling the securities for less than 12 months, it will be known as short-term capital gain. As we have already discussed in our previous video, that short-term capital gain is the gain that can be set off both from long-term capital gain as well as short-term capital gain. But when we talk about long-term capital losses, then in that case the long-term capital loss can be set off only through the long-term capital gain, and it cannot be set off through short-term capital gain. So the correct answer in this case would be B in our option. So you have to remember this thing very properly, that there is a different set of procedure for short-term and long-term capital gains. For short-term it could be set off from both, and for long-term capital loss it can be set off only through long-term capital gain. Moving to the next question now. The rate of tax that is levied on short-term capital gain arising from the transfer of equity shares of a company or units of an equity oriented is dash. Now you must be wondering that that short-term capital gain is something that is usually taxed at the ordinary rate. Ordinary rate means the usual income tax slab that is applicable for the current financial year. But when we talk about the short-term capital gain specifically relating to any of the securities, or you can say listed securities, then the rate has been specifically specified, and the rate of tax that is applicable for short-term capital gain for securities is 15%. So you need to be careful here that whenever the question is asking relating to securities, it would be 15%, and whether in terms of some other properties, that is movable property or immovable property, you need to calculate it as per the income tax slab applicable to the current individual. So that will be the situation. Moving to the next question for the day now. X purchases a house property on March 10, 2016 and sells it on June 10, 2017. It shall be classified as dash. So now here is the situation or a case study where you need to actually recall that how do you classify a property into a short-term capital gain or a long-term capital gain. Now the first important aspect that you need to see in the question is whether it's an immovable property, movable property or a security. So since it's a house property, hence it is an immovable property, it cannot move from its place, so hence it's an immovable property. And while we were discussing about the categorization of these kinds of capital assets into short-term and long-term, I had told you that where it's more than 24 months, that is 2 years, it will be a long-term capital gain, and where the situation is that the time period is less than 24 months, it would be short-term capital gain. Now we can clearly see here that the time duration is actually from March till June 2017, that is approximately 15 months. So hence the period is less than 24 months, and hence the clear cut answer is A, that is short term capital gain. So wherever you get such kind of question, first try to actually see that what is the property being talked about, and then have a look at the time period or the duration very carefully to determine that whether it's a short term capital gain or a long term capital gain. Moving to the next question now. The long term capital gain on sale of listed securities exceeding rupees 1 lakhs are taxed at the rate of dash. Now this is a very important question for the reason that earlier the long term capital gains were actually exempt in terms of securities. So earlier long term capital gains on securities were actually exempt from tax, but owing to this current budget of 2018 or in this particular current year, the new change has come where it talks about that any long term capital gain earned after 1 lakh shall be chargeable at certain rate of tax. So hence any income that you have earned or any gain, long term capital gain that you have earned above rupees 1 lakh shall be taxable to at some rate. So what is the rate that is being asked in this particular question? And the rate is 10%. So you need not confuse in this question. So even if you get the option of being exempted, you have to be careful that now the rates have changed. So the current topics which are being prevalent in the news is or newspapers are there are very good chances of such questions coming into your exams. So we need to work upon these topics as well. Moving to the last question for the day under the topic of capital gain, where the below mentioned items are not part of capital asset. Now before moving to this particular question or moving to the options, I would like to tell you that capital asset, in case of capital assets classification, we have used some kind of positive list where we say that any asset that is being used not in the case of business, but that actually when used for personal use and is actually sold to earn some kind of gain will be classified in the capital asset. Also there is a negative list given that specifically exclude certain items from being a capital asset. So certain items that are being excluded are stock in trade. Now you must also know the reason that why stock in trade is not included under the definition of capital asset. So since stock in trade is something that is being used into business, so any sale would be shown under the head PGBP. So hence it is being excluded. The second term or the second thing that is being excluded is personal effects. So there are certain items or certain assets, specifically movable assets, that are being used by an individual for personal purposes. So any such article that is used by you or your family members for the very personal use are excluded from the definition of capital asset. But there is a long but in this case, that the movable assets such as archaeological facts, archaeological things, as well as you can say jewelry items, and these items are not excluded from the definition of capital asset. So even if you have jewelries which are made of diamond or gold, so such things, though even if they are used for personal use, will become part of capital assets. So this is the major difference that you need to understand. Also a third very important element that is being excluded from the portion of capital asset is your agricultural land, but it's not an it should not be an urban agricultural land, but it should be situated in a rural area. So you have to be careful in this point as well, that it has to be an agricultural land and the agricultural land should be situated in a rural area. So these are the three important elements, you can say, which are specifically excluded from the property or from the definition of capital asset. Any other capital asset would be part of capital asset and shall be liable to be paid for capital gain taxes. So let us have a look at the options now. Option A says stock in trade. So this is not the part of capital asset, we have just read it. Agricultural land in rural area, again this is not a part of capital asset. Archaeological collections. Now don't be confused that though it's a personal effect movable asset used for personal purpose, but still since it's an archaeological collection, so as like jewelry and other assets, this will be a part of capital asset. D, all of the above cannot be answer. E, both A and B. So both A and B are not part of capital assets, hence E is the correct answer, whereas C is part of the capital asset. So that was all about the definition of capital asset. I hope that this particular concept of short-term capital gain, long-term capital gain, as well as capital assets would be helpful to you for your exam. That was all for today. Thank you and have a nice day.